All right, what's up, guys? Back with another Coinbase episode. So for this episode, I am going to skip the news and just talk about what I bought today and yesterday. Also, we have a FOMC meeting today where the Fed is most likely not going to pivot, and I will explain why in a few seconds. So during yesterday's cryptocurrency flash crash, I did end up buying some Mara at the critical support level at $19.21. And the reason for that was, if you go back to the Bitcoin mining episode I made a few weeks ago, 80% of gaps tend to get filled, and 2/3 of the gaps got filled during this cryptocurrency flash crash. I can't tell you if the last gap at around $14 is going to get filled or not, but I did buy some Mara at the bull market support band, the 200 weekly moving average, and obviously the critical support level at $19.21. I also bought some Ethereum today because, as stated before, I think we are entering the next phase in the bull markets, where Bitcoin starts handing its reins off to Ethereum and altcoins. If I want exposure to Bitcoin, then I'm going to do it through proxies like Bitcoin mining stocks and Coinbase. So let's briefly touch on the Fed meeting today. I don't believe the Fed will pivot today, and the reason for that lies in the price of oil. So on screen right now, oil is the blue line and inflation is the orange line. As you can see, throughout history, both the price of oil and inflation have a very strong positive correlation. In other words, both oil and inflation move in the same direction. If oil starts spiking to the upside, inflation will also spike to the upside, and vice versa. So as you can see on screen, oil has climbed back above its bull market support band. Oil has also found support at the 200 weekly moving average in red. So I believe this recent uptick in oil is going to prevent Jerome Powell and the Fed from pivoting today, because as stated a few seconds ago, both oil and inflation have a positive correlation to one another. So if oil is pumping to the upside, that means inflation will also pump to the upside. And if inflation rebounds, then Jerome Powell and the Fed can't drop interest rates. Remember, interest rates are used to combat inflation. So what I believe is going to happen over the next few months is that interest rates are most likely going to remain the same. In other words, no pivot today. Powell will most likely cite persistent inflation in today's Fed meeting. That doesn't mean I think the Fed won't pivot in 2024. I am strictly talking about today's Fed meeting only. Okay, so moving into the charts, for those of you that are new, Coinbase stock is trading in Wyckoff accumulation schematic number 2. We are most likely in phase E, where Coinbase stock is breaking out of the Wyckoff schematic and heading into price discovery. If you are bullish on Bitcoin, this is not financial advice, but you should own some Coinbase shares, because just like how oil and inflation have a positive correlation to one another, both the price of Bitcoin and Coinbase stock also have a positive correlation to one another. So if you watched the last Coinbase episode, we drew the white trend-based fib extension area together, and the key level to break was $287 to the upside. Nothing has changed this week. Now, obviously, with crypto flash crashing yesterday, the end of the world is supposedly happening again, where the sky is falling. As discussed in the previous Bitcoin episode, the worst case scenario for me is a retest of $40,000 to $45,000. And for Coinbase, if that worst case scenario for Bitcoin happens, that would be a retest of the white rising wedge trend lines between the red 61.8% Fibonacci retracement at $158 and the Wyckoff support level at $116.30. Either way, it doesn't matter if Coinbase stock pushes up now or 6 months from now. The bottom line is Coinbase stock is breaking out of Wyckoff accumulation, and we are heading higher in the long run. Coinbase will stand the test of time. Now, let me explain why. I think the key lies in the Coinbase bond market. This looks like a complete V-shaped recovery to me. Now, if you were in the crypto markets a few years ago, you would have known that there were serious concerns about bankruptcy in regards to Coinbase, because Coinbase in the bear markets was reporting almost $500 million in losses in net income per quarter. That was really concerning. But if you watched previous Coinbase episodes, I did applaud Coinbase management on their cost-cutting measures in the bear markets. And thanks to cryptocurrency prices rising, Coinbase stock actually reported a positive net income in the last quarter. So for me, there is no bankruptcy concerns with Coinbase, as I believe the Coinbase bond chart will make a full recovery. And as stated a few seconds ago, I believe Coinbase will be a crypto exchange that stands the test of time. In regards to the bond chart, there could be some resistance at the 1.618 trend-based fib extension at 82%, but in the long term, that will be inconsequential. Coinbase is a company that had a net income margin of 39.5% in the last bull market. So as long as cryptocurrency prices remain elevated, Coinbase is very profitable and will stand the test of time. Okay, so closing things off with the Coinbase against Bitcoin valuation. Yeah, the Coinbase against Bitcoin valuation is gearing up for another test of the red Fibonacci retracement resistance area. Hopefully this time we don't get slammed like we did in December. This time, however, the Coinbase against Bitcoin valuation is making a series of higher highs and higher lows. On top of that, the Coinbase against Bitcoin valuation did retest the 50 weekly moving average in orange as support. So I believe this time we are going to break deeper and higher into the red Fibonacci retracement resistance area. Remember, we need this chart to go higher if Coinbase is destined to go to $2,000 per share. Okay, so that's my analysis on Coinbase stock for this week. I hope you guys enjoyed the video, and I'll see you guys in the next one. Take care.